Bitcoin is down nearly 5% over the last 24 hours. The market is in panic. But we had limit orders in the book placed to go long at those lower prices, and we are currently up over $200 in those long positions. Let's break down how I saw it coming and what I see coming next. As you can see, currently up over $200 on these long positions. This is a 0.5 BTC position size, 5x leverage, and our average long price is $121,410. So, opening up the 15-minute chart here, you can see after last night's video, we broke down beneath support, breaking the uptrend that we've been in over the last couple of weeks. That is the support at $122,300, we'll say. We actually broke down beneath the next lowest support at $121,600 as well, bottoming out at about $120,600. Now, if you watched yesterday's video, you will know that my last buy order was placed in the book, or I was looking to place a buy order in the book, I believe, at the time when I made the video, at $120,600. So if you take a look here on the trade history from yesterday, you can see we had orders placed all the way down to $120,600 on the dot. That was 0.2 BTC for that buy, but I actually averaged into this position. I first got long at 122,200, okay, up here, just as we broke these lows. 122,200, there we go. And like I said yesterday, I was watching this in real time because I wanted to see how we broke those lows. Now I'm going to play you a clip from yesterday's video where we explained the rationale for this, but essentially, as tends to happen in these down moves, as has happened in the last two down moves, there was a lot of long leverage, and that long leverage was essentially, that long leverage risk was focused around these prices, which coincides nicely with this low, which was a significant low, because if we break down the trend, right, we can see a low here, a high here, higher low, higher high, higher low, higher high. Okay, so to break that bullish trend, to break that uptrend, we had to break these lows here. Okay, that was why those were key lows. And we know that traders like to place their stops around lows of a trend. And for that reason, okay, that coupled with the fact that the long liquidation risk was focused around these lows, we knew that these were going to be this was going to be a very, very key level if we were to break through that. And if we broke through it aggressively, the subsequent move to the downside might be extended. These lows also significant, of course, as well. And I wanted to really watch this in real time and see how we broke through that. So initially, the first pull through that wasn't terribly aggressive. I'd say it was somewhere in the middle, okay, between being like not breaking just a little bit, and then bouncing straight up and just smashing straight through. So I did elect to start getting long just beneath these lows. That would have been this order here at 121,500. We bounced a little bit, as you can see on the 15-minute chart, and then we just got slammed back down again, broke through these lows, and that was when we really saw the liquidations tick up. So if we look back at CoinGlass here, on the liquidation heat map, you can see over the last 12 hours, 367, nearly $370 million worth of long positions liquidated out of the market. And that's versus $75 million worth of short positions. Of course, liquidations happening on both sides. It has been volatile. But crucially, we got those long liquidations that we were looking for. And you could see this in real time playing out on the liquidation map as well. The shape of this just totally changing in real time, with this side of the chart becoming much, much smaller and this side of the chart becoming bigger as everyone likes to panic and jump in and go short. And you can see that panic in the fear and greed index as well. We are down a couple of points back into neutral, a score of 55. So I'm going to play you a clip from yesterday's video because I think it's helpful to visualize how we saw this happening, how we saw this playing out. I really wanted to capture the moment that we actually got into these trades, but I think this is second best. So let's play the clip really quickly. More long leverage than there is short leverage at prices just immediately to the upside. And this kind of peters. You can see here the gradient of the liquidation map at the time last night, while we were at a price of 122,830. Although there was much more short leverage liquidation risk, you can see that because of the gradient of the charts, there was actually, in the micro sense, at prices immediately to the downside of that 122,830 trading price where we were last night, the gradient is steeper, and that means that there were more long liquidation risk at prices immediately to the downside than to the upside, and that is why we thought that this move had more room to go. Even though we had a couple of big red candles to the downside, I still thought that there was more gas in that move, more risk, more pain to be had to the downside, liquidating those longs. At where that lies on the chart, you can see we are pretty much in line with these lows. So I think, quite realistically, if price continues coming down, I've been watching this on the short-term time frames over the last half an hour or so, and you can see we didn't really bounce or wick up from this initial impulse down. It's not to say we can't do that right now. It's more than possible. I mean, we've certainly seen action like that in the past, but this is still looking pretty heavy to me. And I think the closer and closer we get to these lows, at least as the situation is right now, the likelihood becomes that we actually break down from those lows and knock out kind of the last remaining residual. The likelihood is, because we didn't wick up quickly from that move down, the most likely scenario was we continued to move down and liquidate some of those residual leverage long positions to prices immediately to the downside. Long liquidation in the market. And that would lead me to think we're going to push down quite a lot further from that. That is really the type of scenario where these moves can overextend to the downside. Again, as supply shocks the market, supply of Bitcoin is shocking the market while these traders are forced to sell. The next low of the trend that we just described comes in at about 121,500. Now, depending on how we break these lows, I might well look to get long for a quick scalp somewhere between these lows and these lows. So that is somewhere between a price of 122.3 and a price of 121.6. Okay, so talking about getting ready to get long between the two lows that we described for reasons already mentioned, right? This was the first significant low that we had to break, and indeed we did start getting long between these two lows. Best case scenario for looking to get long at favorable prices, looking for a big crash down and the eventual bounce up from there, or hopefully the bounce up from there, right, is going to be this level down here at about 120k. Now, the reason for that is essentially a move down that low. If it happens quickly, right, that's a very important caveat to this thesis. We've got to move down there with momentum. We've got to move down there really quickly and totally shock out all of that leverage that's in the market. Let's take a look. So 1215, if we kind of tally that up with our liquidation map, 1215 comes in at approximately nearly $200 million worth of long positions liquidated. And again, right, that's just where the gradient of the average, right, of accumulating. Okay, so I'm describing here how 121,500 coincides with a lot of liquidations going through. Now, you don't always get exactly the number that you see predicted on the liquidation map. Of course, this is live data, and that is changing all the time, right? As traders enter and exit positions, they don't necessarily have to be liquidated just because they're in a position. They can close that position early. But what I will say is closing that position early still amounts to the same thing, which is sell pressure on the market. Sell pressure on the market makes prices go down. Also, as you can see, confluence with this level on the fixed range volume profile. So I've drawn that from basically the bottom of this move up, starting on the 28th of September, and that is a high volume node. Okay, and we also had confluence with the high volume node of the volume profile if we draw that fixed range volume profile from the bottom of this last move up. And that volume node actually came in on the chart at 120,373 here on the Coinbase spot chart. I placed buy orders a few $100s above that, again, at this trade here. So that was 120,600. And that got filled. It only just got filled. If you look here on BTCC, we came down to 120,570. Okay, so there is a difference there of $30. I'm pretty happy with that. Okay, it's as I described again in the last video, incredibly hard to catch a falling knife. That is the analogy that traders use to try and scoop up when you're trying to buy a falling market. Okay, and the way to get around that essentially is spreading out orders. So you can see here my average price is actually 121,410 because we had some other buys higher up the book. This was the lowest buy order that I had, and it did get hit, and that brings our average price down again to that price of 121,410. So we're currently up in this position. We're currently up $250, and I'm comfortable in this right now. Basically, going ahead, I'm just looking to see how we can, whether or not we can continue building value at these prices, right? Whether we can hold these levels. If we look at the liquidation map right now, you can see we're still skewed to the short side. Okay, so as I mentioned, the market is panicked. A lot of people have jumped in short following the trend. But what makes me comfortable in this position particularly is if we zoom this in, you can see there's next to no long liquidation risk at prices immediately to the downside, and we are, because you can see the chart is thicker to the upside, we are already getting into territory, or pretty soon we'll be getting into territory where we can start actually liquidating some of these short positions, or I should say more properly, where these short positions are at risk of becoming liquidated. And again, that would mean buying pressure on the market and potentially a reversal of this down move. So totally comfortable in this position right now. I'm not looking to add just yet, and I'm also not looking to take out profits just yet. Kind of just feeling it out, seeing where we go from here. But the setup is there and things are looking pretty good. Trade isn't over yet. The idea hasn't been fulfilled completely. Nonetheless, in a very comfortable position right now, sitting $250 up. As always, nothing I say should be considered financial advice. That is purely my opinion shared with you for entertainment purposes. Thank you so much for watching. Plenty more to come. Catch you in the next one.